Do you want to throw away your money and be broke? No, of course you don't. So that's why today we're going to be taking a look at this Graham Stephan video. And it has to do with a warning from Warren Buffett that says do not buy a house. Okay, and so obviously this video really caught my eye. And because on the face value, obviously I have some disagreements there. But we're going to take a look at this video. We're going to watch it and we're going to talk about it and see if there's actually anything like really applicable we can take away from this. Is buying a house a trash investment idea? Is it a bad idea? Is it still a solid plan? I don't know. Let's take a look. And let's get right into this video.
What's up, you guys? It's Graham here. So Warren Buffett just issued a warning for the housing market, and you're going to want to hear this. See, back in 2012, after home prices collapsed, Warren Buffett famously said that he'd buy up a couple 100,000 single-family homes if it were practical to do so, and that if held for a long period of time and purchased at low rates, homes are even better than stocks. But now in today's
Obviously, we all know that buying a house has been historically one of the best ways to build wealth over time. And so there's going to be a lot of differences in the way that Warren Buffett is investing his money versus the way that, just me or you or, just some average Joe would be investing their money, or the average consumer. So I'm trying to leave some room in there for some, for some context, but, let's just get into it.
Market,
I keep getting ahead of myself. Let's just
completely flipped. During his most recent shareholder meeting, Warren Buffett said that he no longer sees real estate as an attractive investment. And when he really digs into it, what he says is pretty shocking. After all, he's outperformed nearly every investor in history. He's beaten the markets for decades in a row. And when he issues a warning, it's vital to pay close attention because it might wind up making...
Speaking of that, I actually just recently adjusted the different stocks that I have collected. I actually am currently copying Warren Buffett's or Berkshire Hathaway's stock investment strategy and kind of structuring, obviously not with the same amounts, right? I wish it was the same amounts, but basically using the same percentages of the stocks that he has in their portfolio. So I'm just kind of mirroring that a little bit, and we're going to try that out for a year, a couple years, and see how that goes.
You or saving you a lot of money. Although before we talk about the future of the housing market and what Warren Buffett just said, if you enjoy videos like this, it would mean the world to me if you hit the like button or subscribe if you haven't done that already. It seriously helps out the entire channel tremendously, and as a thank you for doing that, here's a picture of a puppy. So thanks so much, and also a big thank you to Economy for sponsoring this video, but more on that later. All right, so in terms of what Warren Buffett just said about the housing market, I think you should hear it directly from him, and then we'll break down each of his points, starting with this one. It's a lot easier to make money in the stock market than it is with real estate, or as he says,
it's so much harder than stocks in terms of negotiation of deals, time spent. There's so much more opportunity in the security market than in real estate.
Now, in terms of whether or not this...
So before I hear Graham's take on it, I just kind of want to say, like, on face value, I feel like that's kind of pretty obvious. It's very easy to just go, purchase some stocks or, do a call or a put or, purchase options. Like, it's very easy to do all of that. Like, from a, sitting down at a computer, I can just boom, I can buy, I can sell, in a matter of minutes. Obviously, there's a lot more friction in real estate, right? There's, like you said, negotiating deals, going to the properties. There's a potential of, this house is full of termites after you buy it, or house falls out in an inspection period, you sit in escrow for a month and the deal falls apart. So there's a lot of other factors there with real estate. So it obviously is a lot harder. It's a lot easier to buy and sell in the stock market, but I don't really think that's like a groundbreaking statement. I feel like it's kind of obvious.
This is true. Let's start with median home prices, which over the last 100 years have increased an average of 4.3% during a century where inflation averaged 3%.
Which is still pretty good, right? Still outpacing inflation at all is better than not pacing inflation at all. It's better than just having your money sit, in a savings account because you're losing 3% every year.
means that if you just bought a random house and did nothing but hold on to it, that house's value would increase just 1.3% a year above inflation. However, even though that seems really bad, that's only a tiny amount compared to what you could be making with rental income. Generally speaking, on average, a home typically receives about $3,000 a month for every $500,000 of value. And after expenses like property taxes, insurance, maintenance, repairs, and vacancy, you could very well be making an additional 2 to 6% every single year on your money. On top of that, you also have another very special aspect of real estate, and that would be leverage. This means if you put $50,000 down on a $500,000 home, and now the home is worth $600,000, you didn't just make a 20% return. You made a 200% return on your initial $50,000, and that return is phenomenal. However, as Warren Buffett points out, this isn't as easy as just clicking a few buttons and being done in less than a minute. Home ownership and investment takes a lot of time and effort,
That's what I said.
It's ongoing.
The other thing to take into account here is, okay, yes, so like, Graham was saying a minute ago about how, rental income is obviously going to be a better opportunity over time. Getting a rental income, but you also have to think about availability. Thing is, there's a whole lot of people here in the country right now can barely buy the first house, right? So we're still trying to tackle that problem of a lot of people want to be homeowners and cannot be homeowners. Okay, so on the next tier or two even tiers of difficulty above that, we have this person who wants to buy who also wants to buy a rental property. Okay, so you're talking about more money down, an even larger sum down than buying a primary residence. So there's all these there's all these extra levels of difficulty there. So it's going to be even harder, right? So it's not like, well, if this person wants to buy a primary residence or a rental property, if they could buy either. Yes, better option from a investment standpoint would be getting a rental property. But the thing is, a lot of people can't do that. They just can't yet.
It never stops. Like most people, never take into account the time it takes to find and negotiate the right home, the cost of inspection and closing costs, the effort
this is all stuff I said a few minutes ago.
of ongoing repairs, the time of management. It's exhausting. That's why I think for most people who are not full-time...
Time of management is a pain. I recently handed over my rental property to a property manager, just because of the time. It was like, I just feel like constantly, you're collecting rent checks or, during turnover, you have it up listed and there's people who want to come see it. It's such a pain, right? It is such a time sink that it's worth it, for that. I think it's like $260 a month or something like that for the rental management company I don't even have to think about it. Okay, most days I don't even think that it's there. I just completely forget about it.
And real estate investors, I hate to say it, they'll probably make nowhere near as much as they could have made investing in the stock market, and will spend way more time trying to make these outsized returns. Just consider that since 1928, the stock market has averaged a 9.8% a year with dividends reinvested. This is without any work, no management, and no borrowing. Just buy a single fund, take a few seconds, don't paper hands when the market falls, and do nothing. This brings me to Warren.
Okay, and that's the other thing that I was talking about with ease of investment, right? Obviously, buying stocks is a lot easier than buying a house. So for the everyday person that just has a little bit to invest, like if somebody only has $1,000 to invest and save, that's great, right? That's better than zero. But obviously, you're probably not going to be able to buy a house with $1,000, to rent. So, stocks average, depending on what you get. Was this like an average of 9.8% over a year? Mine has done 11% just in the last 6 months. So that's just sitting there, not doing anything, and I can trade and everything from my couch. So it's like super, super easy. It's a lot easier.
Buffett's second point, that stocks are easier. And when the real estate market is down, stocks are down even more. Listen to what he has to say.
Large amounts of real estate have changed hands at bargain prices, but usually stocks were cheaper, but they were a lot easier to do. So there's so much more opportunity that presents itself in security market than in real estate.
All right, so in order to understand what's happening, it's first important to see how housing did throughout previous downturns. Because surprisingly, over the last 100 years, there have only ever been 3 housing crashes, with the first being in 1929. Just as the stock market peaked from record high speculation and borrowed money, the real estate market dropped alongside with everything else in one of its worst crashes in history, falling 67% and taking almost 3 decades to return to its previous all-time high. Then again, real estate encountered more difficulty throughout the 1990s. Up until that point, the housing market saw a huge increase thanks to a growing population, new lending options, and inflation. But the savings and loan crisis caused interest rates to rise, new home construction dropped, and housing prices remained flat or even in some areas negative until 1997. That brings us to the most recent housing crash, and that would be the Great Financial Crisis of 2008. Depending on the location, home prices crashed anywhere from 30 to 80%. A bailout was put together, and the housing market eventually recovered to where we are now at brand new all-time highs. This means, with the exception of 2 major real estate
even though we're not in a crash, you can take a look at this graph, still trending down over the last 2 years, which is not good, right? Again, not crashing, but it's not good, and not good for the future. I just did a video on this the other day about how Florida, right in Florida, home prices are 5% down year over year, which is really not good. Something's got to give.
To where we are now at brand new all-time highs. This means, with the exception of 2 major real estate crashes in 1929 and 2008, housing prices have been fairly resilient, with very few groundbreaking opportunities. Like during and after World War II in the 1940s, despite the stock market falling, housing prices and construction boomed from a surge of demand. During the 1970s stagflation era, real estate prices went higher thanks to inflation. Again, during the 1980s recession, real estate saw a 4.5% increase as inflation stayed high. The 1990s saw some markets soften, but nothing dropped more than 10%. In fact, in 2001, home sales continued to climb to an all-time high, despite the stock market falling as much as 80% depending on the index. All of this suggests that, yes, stocks have a lot more volatility. When the housing market falls, stocks tend to drop a lot further. And if you're looking for an incredible buy-the-dip opportunity, it's unlikely to happen in the housing market. For instance, the last time Warren Buffett even considered buying real estate was back in 2012. And he said it himself, part of the appeal was low interest rates fixed for 30 years. Under certain conditions, borrowing at 3% from a bank makes a lot of sense. But today, that's no longer the case. So what does Warren Buffett recommend instead?
The other thing he said a minute ago about buying the dip, that's tough, right? Because housing market has this weird situation where the dip is really, it's not necessarily the total home price that causes like people want to buy on the dip. What's really the dip people are looking for is the dip in interest rates, because a drop in interest rate is going to greatly decrease the monthly cost of buying a home, right? Because the monthly mortgage price is going to go down. So the issue is there. When the dip happens in the interest rates, this also causes a bunch of people to flood the market and want to buy as well, thus driving up the prices even more. So it's kind of this really not good effect.
And why does he think that?
And I do have some things to say that I'm kind of saving until a little bit, kind of like my ending thoughts here. I just want to give him a chance to get out everything, just in case I'm missing something. Right? I want to get the full context of what he's saying here.
Real estate is no longer worth it. All right, now in terms of Warren Buffett's thoughts on the housing market and why he stays away from real estate, he makes another really good point that most people don't consider. And it's this: when you buy a property, it's usually from a single owner, and it's an enormous emotional decision to sell. And that takes a lot of time. Or here's what he had to say about it.
You're dealing with a single owner. To them, it's an enormous decision. When you walk down to the New York Stock Exchange, you can do billions of dollars worth of business totally anonymous, and you can do it in 5 minutes. And the trades are complete when they're complete. In real estate, when you make a deal, then people start negotiating more things, and it's a whole different game.
Look, from my perspective, as I alluded to earlier, he's not exactly wrong. Real estate is not as liquid as stocks are, and anytime you want to buy or sell something, it takes a significant
It is always a pain. Anytime you go into escrow, there's just it's never clean from beginning to end. Okay, it's never clean from contract day. Well, maybe one time I've seen where one time I had a deal that I like completely forgot about its even existence, and then like 3 days before closing, I was like, oh yeah, we're here, we're good to go. Everything's fine. There was no fires. Every other time, minus that one time, every other time, something goes wrong. People, they want extra repairs or something comes up, financing this, whatever. It's always something.
Significant amount of time and effort. Not to mention, everything turns into a negotiation. Like when I make an offer, we usually go back and forth with the seller for a few days to a few weeks. Then we do inspections. That turns into another negotiation for credits or repairs. Then there's the negotiation with the escrow company to lower some of their costs, a negotiation with the contractor on some of their repair estimates. It's a long, drawn-out process that's very difficult to scale unless you're dealing with a huge apartment building or a mass portfolio of homes. On the other hand, if I want to buy or sell stocks, it takes just a few seconds anywhere in the world. I don't have to wait to try to find a buyer. I don't have to negotiate. I don't have to wonder if the deal is not going to go through or if it is. It's just instantly finished. This is why Warren Buffett could get such outsized returns above and beyond anything else. Or let's take the example of buying the S&P 500 index. Instead of putting $50,000 down on a $250,000 home in 1995, an investment in the stock market would be worth over $904,000. Compare that to housing, which has appreciated 4.3%, and that would leave you with $844,000, not including the expense of maintenance, property taxes, insurance, and repairs. Now, of course, in fairness, that doesn't account for rental income, but still, when you look at the hour-per-hour value of your time, stocks are generally the clear winner. So when does it...
Speaking of that, kind of on that sense of, this is, over time, it's very easy to look back in hindsight and say, well, if you just would have invested this 30 years ago, like in his example, if you just would have invested $50K 30 years ago, 50,000 was a lot of money. Okay, that was an incredible amount of money. Okay, and there's a lot of homes in the US right now that are selling for, that were bought 40, 50 years ago, right? And they were bought for $80,000, and now they're selling for like $2 million, right? This is like not an uncommon thing you hear about today. So the whole like hindsight thing of like, well, if you just would have invested this in the stock market, 30 years ago, well, what about buying that house? Okay, buying a house like today, right? If you're thinking about how it's going to look on paper today, like, okay, and maybe over the next 1 year, over the next 2 or 3 years, might not be great, right, compared to other investments. But what about 30 years from now? Okay, 30 years from now, would you look back and say, okay, you know what? That was solid. I got that house locked in, at whatever price. I got the house locked in at $400,000, and here we are 30 years later. Who knows what inflation is going to do in the next 30 years, right? Oh, now the house is worth $5 million, right? Now the house is worth, I don't even know how much, right? Because we don't know what's going to happen. But I think it's, it's very easy to get in the whole like hindsight. This is a good idea. In my opinion, I'm looking forward and saying, I'm just guessing, right? I'm just taking a bet. I'm taking a chance saying, in 30 years from now, I think I'm going to look back and say, that was a good idea. That's kind of like how I'm judging it. Could there be better ways to spend that money? Maybe, probably. But is it going to be good or is it going to be bad? Right? Is it going to be worth it? Am I going to be glad that I did that? I think yes. Anyways, we'll shut up.
It makes sense to purchase real estate. Well, first of all, let's be real. You and I aren't Warren Buffett. 99.99% of people are never going to see the returns that he does. And for everyday investors, it is possible to make a significant amount of money in real estate if you're buying as an investment and you're prepared to put in a lot of time and effort to run it successfully. Yes, it is significantly more work than stocks, but the way I see it, it's not exactly a one-to-one comparison. For example, unless you're specifically buying an undervalued rental property that you could fix up at a favorable mortgage rate in a landlord-friendly city, most real estate is simply a long-term hedge against inflation and a way to put a roof over your head. That's it. If you're looking for a place that you could move into yourself that you plan to keep for at least a decade, then yes, buying can make good financial sense. But at the short term, at today's mortgage rates and...
Okay, that's the other thing I was kind of saving until the end to give it a little bit more context. I think this is a good time to bring this up. We talks about the idea of how it's also a place for, it's also a roof over your head, right? And the other thing that I don't think, Warren Buffett's obviously, when he's talking about buying 20,000 houses, he's not really considering, he's just considering that from a year over year increasing money standpoint. Okay, he's not thinking about this from I also have to have a place to live. The thing that I don't think has really been taken into account here is that everyone is going to have some sort of monthly expense for where they live, right? A lot of people are renting, right? And, I rented for years. So in my situation, I rented for 6 years. I rented this place, and over the course of that 6 years, I gave my landlord almost $70,000. It was like almost $1,000 rent, right? And that was back started in 2012. So right now that would be considered super cheap. But if I would have bought that same house back in 2012, now I could be the one collecting rent on that house, but I rented it instead. But the thing is, everyone's going to have that monthly expense somewhere, right? So, and if you're renting like I was, the money was just going away, but you already know that. So that money has to go somewhere. So it can either go, a little bit towards your own home or your own investment, and or you could, spend it on rent. There's positives and negatives to both, right? If you're renting, it's kind of cool because then you're not locked down. You could leave at any time. You don't have the major expenses. What if it gets filled with termites, house burns down, whatever? It's not really super your problem. But the other thing is that there's a lot of emotional positives to owning a home, right? You can, build some, build some built-in shelves in the living room, or you can do redo one of the bathrooms and put some batten board on the wall. So there's a bit of a emotional, emotional enhancement to being able to work on your own living space and kind of make it what you want. So I think there's a lot of benefit there that's not purely, can't really put a number on that. It's kind of, it's kind of intangible. But anyways, that's basically what I was talking about.
Prices. Investing in other assets seems to make more money on paper, even though it's more volatile. You also have to take into account the cost of property taxes, insurance, maintenance, and repairs that will eat into your profit. And most people never take this into account to get a full understanding of how much their home is actually costing them, especially if they're not actively renting it out. Besides that, though, on an emotional level, I will say that there is something to be said about owning your own house, having total control over what you do with it, and deciding whether you want to move in or rent it out. It's up.
Graham, I couldn't agree more. I'm glad you're saying that. I couldn't agree more.
To you. On top of that, it's hard to compare stocks to real estate because they both serve a completely different purpose. They're not one-to-one. Like housing declines less in down markets. It offers utilities, and you could always live there. And you're able to borrow most of the money from the bank at a fixed interest rate. Not to mention, diversification is smart. And just because something doesn't make as much money as possible doesn't mean it's worse. This is why...
So again, that's exactly what I was saying earlier. Is just because it's not the most optimal way, right, to invest your money and make the most amount of growth, doesn't mean that it's not bad, right? You can actually do both and have it be okay, right? So I've got a good little split, some stocks, rental property, nothing crazy, and it's working great for me.
As an investment, I haven't bought real estate since 2020, since I already own.
I will say this: I had a second rental property, and I sold that one, and I kick myself almost daily for selling that. It was it was at the peak 3 years ago, and the price has just kind of gone down since then. But still, something about it, I just wish I would have stayed locked into it. I kind of cashed it out. I figured, you know what, I don't want to deal with any problems with it down the road. Just kind of cashed it out and made a decent amount of gain on the price. But man, I'm kicking myself. I wish I would have kept it for another 10, 20 years.
Own real estate, I have that box checked off, and I prefer a more hands-off approach. Not to mention, from a return on capital standpoint, I'm only able to run a profitable rental business because these properties were purchased almost a decade ago, financed with really cheap debt. At today's levels, none of them would cash flow, and I would be losing thousands of dollars a month. So this was only sustainable when conditions were good.
And that's the other thing, is trying to get a property to cash flow right now, like buying an investment property. You have to put, with the interest rates being so high, and like in a lot of places, rental prices have taken a dip as well. Like in Florida, rent is actually down. Just like home prices, rent is down year over year too. So rent is down, interest rates are up. So the amount of money that you have to put down as a down payment to get the principal low enough so that with the high interest rate, you're still cash flowing on that property month over month is like, it's wild. Most people would not even consider it. And from an investment standpoint, that's probably not a great plan. It would be better off somewhere else.
And now it's really difficult. Yes, I'm sure deals still exist in certain markets, but they require a lot of time and effort to buy, find, manage, and renovate. And that's why I believe that dollar for dollar, index funds for most people offer the best of both worlds. This is also why Warren Buffett would have bought real estate in 2012 after prices had already fallen 30 to 50% when interest rates were at the record lows. But now there's not as much room for price discovery, and on a large scale, it just isn't feasible for him to move forward with it. But for the average person, it might on a small scale, although I wouldn't expect you to get rich from it overnight. Or I guess put another way, this is a long-winded way of saying that housing can be a good investment, but it's not automatically an investment by default, unless you buy it specifically with the intention of making money from it. And even then, it's difficult to compare one-to-one with the stock market, because you need to live somewhere, and housing is going to be a lot more stable, even if the stock market declines. Personally, I believe that in real estate, you tend to make most of your money when you buy, not necessarily when you sell. And it's difficult to compare values equally when there is an emotional aspect to owning a home. But it is worth reiterating that housing is not always the best investment. It's worth it to diversify your options instead of going all in on one thing. Real estate can take you a lot of work and effort to manage effectively, and no matter what, most importantly, hit the like button and subscribe.
Yeah. Okay, that was a great video. Just kind of in summation, what I want to say is, so the overall thesis of the video, do not buy a house. I don't think that's really the main thing, the main message he's trying to get across. But I will say, to the idea of do not buy a house. Okay, so it's true and it's not true. Right now, just buying a property for the purpose of using it for rent and rental income, probably not the greatest idea. It could be okay, but I think there's a lot better options right now. But for the purpose of buying a primary residence, I still think that's a great idea. And if you can swing it, I still think it's a good idea. And that being said, diversification is great, just like Graham said. If you're not buying stocks to some amount already, I would get started, right? You can get started for, $50, $100, right? Just download the Robinhood app, right? And this is not a sponsored video. I'm just saying, try it, get into it, okay? Just download the Robinhood app, put $50, $100 in there, and look around and buy some stocks of a company that you like. Like, it's that simple. Bank of America, do a high dividend yield, Vanguard. You could buy some crypto. You could buy like a Bitcoin or Dogecoin. You can get whatever. I just think you should try something and just watch it. Right? Just see what it does. When it dips, throw another 50. Throw another $20. Throw another $50 at it. Watch it go up. You might get it. You might start to enjoy it. Anyways, hope you enjoyed this video and have a great day. I'll see you in the next one.